Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. Hello, in today's video we'll be taking a look at the Thursday, October 23rd, 2025 trading session for the CBOE SPX index. We'll be using the Day Trading GPS SPX Daily Key Levels indicator, specifically the V2.0 version of the indicator, which was just released a few weeks ago. This video is going to be different than our typical video. We're going to make it a lot shorter and just get right into the trades for today. If you would like to see more videos on how exactly this indicator works, then simply look in the description of this video and you will see links for other SPX trading videos that go over how to trade with this indicator, how it works, and also other topics regarding the indicator. Okay, so in today's session we have the indicator giving the SPX bull bear key price level for today's session as 66.9501. So that's bullish above and bearish above this level. You can take trades off of the other main R levels and S levels with this indicator. There is a link to a video in the description of this video on that topic. So if you would like to see more information about the indicator and how it works, look at that particular video on how to take trades off of the R1 and S1 levels. There are other links to other videos in the description, including all the features and inputs in the user control panel of this particular indicator, as well as other topics such as what option strikes you should choose depending on the level you're trading from, and some other topics that are covered in other videos. So like I said, today we're just going to go over the trades from this session. So if you want a more full explanation or details on the indicator, please look at the other videos in the video description. Okay, so on this 9:30 open we have right here for today's session, as you can see, this candle opened above the bull bear key price level, and it also, most importantly, closed above the bull bear key price level. We're on a 2-minute chart, which is the recommended time frame for this particular strategy, which is buying calls on bullish entry signals or buying puts on bearish entry signals, depending on what level that we're trading. On the 9:30 opening candle, typically in 90-95% of the sessions, that trade is going to be based on the bull bear key price level. In this instance, it did close above the bull bear key price level on the opening candle. So if you took the opening candle trade, that is your bullish entry signal. You have basically 3 different call strike options for this bullish entry here for taking a trade off of this level. One is your at the money strike, so that's going to be the at the money strike closest to the bull bear key price level of 66.9501, which is the SPX 66.95 strike. You can either use 0 DTE options, which we have done, and that is what is recommended since you will be opening and closing the positions all in the same session. You can also consider using 1 DTE options if that is your preference. In today's video, we'll just be looking at 0 DTE options. The other 2 strikes that you can consider using based on the bullish trade being from the bull bear key price level on this particular opening candle. The process of doing that, which there's also a link to a video or the more details on how to decide the out of the money strikes for any particular level trade. in the link is found in the description of the video. But for this particular trade, this is the level that we are trading from on this opening candle on the bullish entry signal. So the process of finding which two out of the money strikes we can also consider is, first we look to the midpoint above, the first midpoint above the bull bear KPL, which is 6704.64. So in that case, we have the closest strike to that is the 6705 call option. So that is your first out of the money possible strike that you can use if you prefer that over the at the money. The furthest out of the money strike is going to be one full level away. So in this case, since it's the bull bear key price level and it's a bullish trade, we look to one full level above, which is the R1 level. That is 67.1426. So the closest strike to that is going to be the 67.15 call option. We'll be looking at the Thinkorswim 2-minute charts for these options as well, so you can see the prices on the data boxes for the entry as well as when it hits these different levels. The buy price on the 66.95 0 DTE call on the close of this 9:30 a.m. candle is $22. So one call option of the 66.95 0 DTE is going to cost you $2,200. You multiply the costs that you're paying, 22 in this case, times 100, and that is your cost of one call option. How you determine the stop losses on the trade on this for a bullish trade off of this particular level is that the standard stop loss is going to be the first midpoint below the level that you're trading. In this case, since it is the bull bear KPL, that the first midpoint below is this midpoint here, mid BBKPLS1 of 66.8539. If you prefer to use a tight stop loss rather than the standard stop loss, it is going to be the first QL below the level that you're trading. So in this case, that's QL below BBKPL, 66.9020. If you're using either one of the out of the money strikes, you still use the same stop losses because the stop losses are based on the level that the trade is derived and taken from, not where the strikes are for the out of the money. So you would use the same standard or tight stop loss even if you choose to use the out of the money strikes compared to the at the money. The first out of the money strike that we could consider, again, that was the 67.05 based on this first midpoint above. So that is the 67.05 call option. The buy price on the close of this candle for that call option was $15.50. The furthest out of the money strike that you could have considered based on this level being the trade is going to be the 67.1426 level here. So that was the 67.15 call option. The buy price on that option at the close of this candle was $10.70. Now, as I said, if you want more details on how to trade with this indicator, please look at the other SPX trading videos, which are about an hour long each, which go into a lot more detail than this particular video is going to do on this day. So on this 9:38 a.m. candle, you can see that it hits the R1 level on the high wick of this candle here. So the way that this indicator works as far as taking your profit targets on exits is that you have to decide before you take the trade whether this is going to be a scalp only trade or a regular trade. We go into more detail in the other videos that I had talked about that you have for the links in this video description on explaining the difference between scalps and regular trades and how regular trades are managed differently from level to level as it continues to move in your favor. So please look at those videos for more details. So on a scalp, you're looking for only a one level move in your favor before closing out 100% of your contracts. you are not doing any adjustment to your stop loss. When it hits the target, you are simply closing out 100% of your contracts on a scalp target. In this case, on this candle, that was accomplished as far as hitting that one level target on the wick of this candle. So a one level move is going to be defined as the one level in the move as far as what particular type of trade you're doing. In this case, since this is a bullish trade, we're looking for one full level above. One full level above is this bull bear KPL is the R1 level. So when it touches R1, then you're closing out your scalps. The 66.95 call price on the high wick touch of the R1 level was $27.20, so that's $520 profit per option. The first out of the money call strike, the 67.05 on the high wick touch of this level was $20.20, so that's $470 profit per option. The 67.15 furthest out of the money strike on the high wick touch here of R1 was $14, that's $330 profit per option. Regular trades, if you look at the other videos that I mentioned, you will see that the minimum required target for a regular trade is going to be a 1.50 minimum level move. That was hit later on here at 9:48, but we will go back to the scalp here because you can see here that on this 9:44 a.m. candle, we not only got another touch of the R1 level again, but it also closed beyond the R1 level. So if you missed getting out here based on the touch, you had another opportunity to get on your scalp here. Here in this case, the close of the candle was near the high of the candle as well. As you can see, we have just a tiny wick on the top of this candle. So the 66.95 call price on the candle close here of this particular candle was $32.34 on the 66.95 call. So now that is a $1,034 profit per option on the 66.95 calls on a scalp only. On the 67.05 out of the money strike, that was $24.70 on the close of this candle, so that's a $920 profit per option. The 67.15 call was $17.70 on the close of this candle. That's a $700 profit per option. Now, just 4 minutes later, on the 9:48 a.m. candle, it hits the mid R1, R2 level here. That on a regular trade, this is the minimum required 1.5 level move target for a regular trade to either close out or do an adjustment or start scaling out. If you have multiple contracts that you're trading, then you have the option of scaling out. So a 1.5 level move, you take the level that you're trading from, in this case the bull bear key price level. It's a bullish trade, so we're going to look 1.5 levels above. This is a half level, this is a full 1 level, this is a 1.5 level. R2 would be a full 2 level move. So the 1.5 minimum level move target for a regular trade was met here on this 9:48 a.m. candle, which you can see it touches and also closes above. So this is the decision point on regular trades for either a 100% closeout of your contracts or adjust your stop loss to break even. When you're adjusting your stop loss on the first adjustment here, remember our stop losses were based on a level to begin with. Here we're switching to just a stop loss based on price. So adjusting your stop loss to break even means that you are adjusting your stop loss to break even, which is the price that you paid, or you instead can adjust your stop loss on this first adjustment to break even plus adding a 10 to 15% profit buffer on any remaining runners that you would have. If you were trading multiple contracts such as 3, 4, 5, 10, 20, etc., then you also have the option of doing this, which is closing out 70 to 90% of those contracts in full, and then on any remaining runners that you're leaving, then you would adjust your stop loss to break even, or break even plus a 10 to 15% profit buffer. So what does break even mean on the 66.95 call? That means you're adjusting your stop loss to 22, or for example, if you added a profit buffer of 10%, then you're adding 10% of this 22, which would be $2.20 to the 22. So a break even plus a 10% profit buffer would be $24.20 in the case of this particular option, as opposed to just break even, which would be 22. The 66.95 call price on the candle close was $35.30, so that's $1,330 profit per option. The 67.05 call price on the candle close was $27.20, so that is $1,170 profit per option. And the 67.15 furthest out of the money call, the price on the candle close of this was $19.72, so that is a $902 profit per option. If price continues to move in your favor up to the next level, which would be a 2-level ideal minimum target move for a regular trade, then you would again have a decision to make to either close out or do an adjustment to your stop loss. Again, if you want to see other videos on how to trade with this video that are how to trade with this indicator that are a lot more detailed than this particular video goes into, then look at the links at the description of this video for other SPX trading videos, which will go into a lot more detail about how this indicator works, what each of these levels means, and how to use the indicator for entries, stop losses, managing trades, and target exits, as well as adjustments on various targets depending on what type of trade that you're doing. Also, you will see other topics, as I mentioned, on other topics concerning this indicator as far as features, setup, display, out of the money strikes versus at the money strikes, as well as there's also another video in the description, which is how to take trades off, both bullish and bearish trades, off of the other main R1 through R6 levels and S1 through S6 levels as the session progresses, as well as the two different types of trade entries you can do with this indicator, the standard trade entry and how to recognize that and utilize that, and then also the more conservative trade entry, which takes additional confirmations and how to recognize that and take that as well off of any of the other levels as well if you're trading throughout the session and other levels come into play for bullish and bearish trades. Alright, if you are interested in purchasing this indicator, as we mentioned at the start of this video, you can email us at daytradinggps@gmail.com. In return for taking your time to watch this video today, you can request that we send you a discount promo code that you can use to purchase the indicator. And we will send you a discount promo code that will give you a substantial discount on the purchase price of this indicator off of the regular price. Again, thank you for watching this video. Please like and subscribe the video if you found it to be useful, as that helps us with the YouTube algorithm, and we would appreciate if you would like the video. If you would like to subscribe to this channel, simply subscribe to the channel and you'll be notified in the future for additional videos that we release. So thank you for taking your time to watch this video today, and we wish you much prosperity in all of your future trading endeavors.